Kitco Mining special coverage of Xplor 2024 is brought to you by Radisson Mining Resources.
Welcome back to Xplor 2024 in Montreal. I'm Ernest Hoffman for Kitco Mining. Joining me now is Peter Krauth, publisher of SilverStockInvestor and author of The Great Silver Bull. Peter, thank you for being with us.
It was a pleasure, Ernest. Thanks for having me.
And especially a pleasure this year, maybe, because obviously we talk to you fairly on the regular, and we have seen some of the things that you've been promising or alluding to have come to pass. So it's an exciting time, obviously, for the silver producers, an exciting time to be looking at investment opportunities in the silver space.
Absolutely. I think that it's only going to get better.
Well, let's see where we've gotten so far. Silver is starting to take off. We've been waiting for that. Obviously, silver is often delayed. It's a delayed reaction to a gold rally, but it tends to overshoot. So we broke above $33 an ounce around October 18th. And we've been holding pretty solidly above there, some retests, but where do you think the floor is in the short term for silver prices right now?
So 32 has been a ceiling for quite some time. If I think back to mid-2020 when we had the COVID pandemic panic, it shot up to about 32 and then stayed in a range for a long time. Didn't test really 32 until would have been, I believe it was May of this year. And so the range was about 20 to 32. And so we could tell, if you looked at a chart, it wasn't that difficult to tell that it was consolidating in that range. 32 was the new ceiling. It needed to test that a few times. And like you say, in the last month or two, we've broken above that. I believe that 32 will now become a new floor. We've been above it long enough, I think, that we can probably expect that to be the case. I was expecting that 35 would be reachable by the last quarter of this year. We're in there, and I didn't expect it would reach it that quickly. So we've touched 35 a few times already in recent weeks. We're now, as we speak, I think around 32 and a half. And as I say, if 32 holds, I believe it will become a new floor.
Okay, we'll talk about some of the upside targets a little later. So I wanted to kind of break down the components of your silver bull thesis. There are a bunch of things that feed into this, and some of them are a little bit counterintuitive. So I wanted to kind of get your sense of this. So we can start with macro. You believe, as many people do, that global debt levels are unsustainable in North America and around the world. And you believe this should be a major driver for silver prices, not just gold. Everyone understands the relationship with gold as a hedge against debt levels, but you're saying that silver is in fact going to play a role there as well.
I think so. I mean, it's true that silver is more volatile, but it's also true that silver is really both an industrial and a monetary metal, and that's what makes it unique, I'm going to say, amongst metals in any case. But it's also been money actually longer than gold has. Mm-hmm. So something like 5,000 years, that's something that I write about in the book. And some believe that silver has been used more as money in terms of if you value transactions globally, historically, it's been used more than gold has, which also makes sense because of its lower value per weight, that you would have used it more in sort of daily transactions. And so silver is definitely money. There are more than 14 places in the world that use the word silver as money. So there's a lot of history and cultural affinity to silver. And I think that if you look at how investment demand flows, so we're talking about coins and bars, when the demand for silver comes back on the investment side, and it does ebb and flow a lot. It was crazy in 2020 and 2021, and then it had pulled back a little bit. These are somewhat unpredictable, I would say, but when it comes roaring back. And I would simply just not underestimate the demand, the investment side of demand for silver. Okay.
So then another key component is obviously the rate cycle. So this is obviously a big driver for gold. And so people see the falling rates as a driver in and of themselves because it's the opportunity cost for holding metals goes down. But you also believe that that the reason that we cut rates has a lot to do with it, and you don't think we're necessarily out of the woods yet. So what is your sense of where we are in terms of the rate cutting cycle and the potential for surprises on that path?
I mean, there's always a potential for surprises. I mean, the Fed, the market sometimes has a hard time pricing in what actually plays out. The Fed themselves have probably the worst record of predicting how things will play out in terms of rate cuts and what inflation will look like, what economic projections should be. So I do think that we're going to see more cuts. It's interesting that some of the research I saw just recently thought that we may not see 2 cuts this year. This was the large U.S. investment banks thought we may see only 1 more this year. Honestly, I don't know what to expect in that realm. I do think we're going to see more cuts. I think they will continue. They will ebb and flow. We'll probably see that continue through till maybe mid to end of next year. I still think that a recession is in the cards. And if you look at when the Fed starts to cut rates, the last 2 rate cutting cycles, on average, were about 3 to 4 months before a recession would hit. So the first big cut came in September. If history repeats, that would mean sometime maybe in early Q1 next year, we could be officially in a recession. And there's always been talk about how that affects silver. And it's true that if you look at how silver reacts, it doesn't react as well as gold does in a recession. There are things that may counterbalance that a little bit this time around, which we can get into. But history has also shown in the last 3 rate cutting cycles that silver performs exceedingly well. There was some research by the Ingold We Trust Report group, Incrementum, and they showed that if you look at how silver reacts in the last 3 rate cutting cycles, silver was up 32% from within the first 24 months after the last 3 rate cutting cycles started. So that's pretty good within 2 years after starting to cut rates, despite the potential weighing against silver because of its uses as an industrial metal. So I'm going to one-up that even more. And I had looked at research they'd done on gold when the Fed would start cutting rates, and I thought, that's interesting. Let's see what silver does when the Fed starts cutting rates. So I did cherry pick. I'll be fair about that. I'll be honest about that. What I did was I looked at once they start cutting rates and how does silver react after that? And I picked the bottom. So in other words, they would start to cut rates. Silver may come off for a bit, but then it bottoms and then it starts to take off. Well, in the last 3 rate cutting cycles, if you go from bottom to peak in the silver price, silver was actually up 332% on average in the last 3 rate cutting cycles by the Fed.
And that's in a 2-year period? How long is that?
That varied, actually. That could have taken anywhere from about a year to 2 years, but that's still a tremendous return, right? It did correct as well after peaking because it's volatile and it over rallied, I suppose you could call it. And then there was some rationalization of that run up, but that spells real opportunity for what the silver price can do. So, it's out there. I'm not making it up. You can go and look at the numbers. That's how silver performed, and I don't see why anywhere from maybe 100 to 150%, if it averaged 300% the last 3 times, would be unrealistic this time around.
Okay, well that's very encouraging. So I guess what you're saying is that gold has its drivers when we enter a recession. Silver comes off a little bit. In this case, likely because industrial demand goes down in a recession. Industrial demand isn't as much of a driver for gold. But then silver overshoots for monetary and presumably industrial reasons coming out of that.
Exactly. So, the same group, Incrementum, did some really good research. They took recessions, multiple historic recessions, and split it up into sort of 5 time periods: pre-recession, early recession, mid, late, and then post-recession. And silver outperformed gold pre-recession and post-recession. So I think we will see something similar potentially happen again this time around. Where I do see a potential for, the market maybe getting it wrong is that I think that so much of the energy transition is mandated now. And we saw it in the great financial crisis. We saw it during COVID. Governments like to come back, and I honestly believe that one of the big reasons they're cutting now is so that they can stimulate again. So that they're stimulating now. One of the big reasons that they're cutting back on their balance sheets at central banks is that they have room to expand their balance sheets once again, which I think they will absolutely do once we hit recession. So allowing for this room, allowing to stimulate, means the Treasury is going to spend, and for the Treasury to spend, they have to do things that are palatable for voters. And one of the most palatable things is infrastructure. So, because people will argue that everyone benefits from spending on infrastructure. We saw that in the great financial crisis coming out of it. We saw that coming out of COVID, and I think we'll see it in the next recession as well. So that's very, very positive for the green transition. Things like EVs, things like solar, things like wind, even charging stations for EVs, for example. Now we've got improving solid state batteries. We've got all sorts of things going on. Silver is key to all of these things. And that's why I think that we may be underestimating how silver will perform in a future recession.
Right, because the exact things that the governments will choose to stimulate will be silver intensive.
Exactly.
All right, well, let's get into that demand picture then. So obviously the story for the last several years has been decarbonization and the rise of solar as a massive growth area in terms of silver demand. And so that's obviously happening in Europe, happening in North America with stimulus, but it's happening in Asia and the developing world perhaps even more because there are massive financial incentives just to be able to provide electricity in areas where you're not on a major grid, or people investing of their own accord. I guess we can start with China. So China had very bold projections for their own solar build-out, and they seem to have already achieved some of those. So where are we at in China, and has silver fully priced in the real demand curve for what we're seeing in China? Because we've upped those numbers more than once.
Yeah, so, I mean, they've had very, very aggressive growth in terms of both solar manufacturing capability. They dominate globally at about 80% of manufacturing for solar panels and parts for solar panels. And you're right, they are getting close or getting close to achieving their goals in terms of solar energy supply from solar. And so we have to be careful about projections because at some point things will obviously change. But I saw some very interesting statistics recently that showed that projections, 5-year projections on solar adoption were historically very, very underestimated. So they were always higher than had been estimated when you looked 5 years out, like considerably underestimated. And so, any 5-year period before the present day is already much less invested in, Exactly.
has much less momentum than what we're seeing now.
That's right. And that's why, I think the outlook remains very bullish. I do think that to some extent we could see not the rate of growth stop, but at least slow somewhat. So ongoing growth, but perhaps less aggressive growth in China, for example, in terms of manufacturing capacity, in terms of installations. But I think we need to start looking at India, their neighbor, and they have a similar population. The International Energy Agency has said that India is expected to have the largest energy demand growth of any country over the next 30 years. India has said that they're building out the world's largest renewable energy park, in Gujarat state. It's going to be 5 times the size of Paris. It's going to consist of solar as well as wind, but the vast majority of it is going to be solar. And we're starting to see numbers for India's solar manufacturing capacity start to ramp up a lot. Now, they're nowhere close to what China is. They're probably somewhere around maybe 5% of what China is, and China's 80%. So it's still very, very early days. But given the kinds of plans that they have and the kind of rollout that we're seeing in solar in India, I think that they're really starting to become a big player in this area. And so, we've started to see, and for a couple of reasons, we started to see imports of silver in India absolutely take off. So you could argue, now what happened in the middle of the year this year was they cut back on import duties on silver. Silver buying took off. It absolutely exploded. I think it was a mix of both investment and jewelry as well as industrial. But in February of this year, there was an absolute explosion of imports into India. It was something like 64% of all of 2023's import numbers took place in February alone of this year. Now, more recent numbers, if you look at Q3 imports into India for silver, they are 500% what they were Q3 of 2023. So, I mean, the numbers are really almost literally off the charts. It's very impressive to see the amount of silver that India is consuming right now. And I believe it is a true mix of both investment and I lump investment and jewelry into the same investment category and industrial as the other category, so to speak. And I believe it's really a fair mix of both.
Okay, and that's true in India. If it's true anywhere, that silver is a cheaper gold in monetary terms in value preservation. India is that place. So it also makes sense potentially that when gold prices reach these lofty highs and it becomes we saw gold demand come off in China. It's possible that at those prices, silver demand can pick up a lot of that slack.
Absolutely, and in fact, just sort of anecdotally, I was reading that there's starting to be increasing demand not only for silver versus gold jewelry, but also gold-plated silver jewelry. So they're kind of getting the a mix of both, paying less because it's mostly silver, but getting the look because it's gold-plated. So these are developments that we're seeing in India for sure.
All right, and then another interesting wrinkle, which I wasn't expecting, but I guess it makes sense when you think about it, is we talk a lot about solar decarbonization, but one of the other massive areas of investment, which is the solar is also about, there are environmental drivers and there are policy drivers that are a little bit more dependent on who's in power, government priorities. One thing everyone seems to be on board with is AI. AI being the future. No one seems to be disputing that. No one seems to be doubting the investment curve on AI. And you believe that AI is going to need a lot of silver as well.
I do. If you look at the demand from AI is a driver in a couple of ways. I think sort of on the technology side, these computer chips, microchips, need silver to function, and it's very effective in them. The other side of it is in storage indirectly, because storage requires energy to run storage, data storage centers, and I believe that we've got the 800-pound gorilla is nuclear. If you look at what's been happening in the last few weeks, in fact, very impressive to see that. Almost one after the other, almost 1 week after the other, you had Microsoft, you had Google, and you had Meta all say that they're going to tap into nuclear power to help supply energy for their data centers. So data is just going off the charts. Believe if I have this stat right, the amount of data that will be generated in 2025 will be 50% more than all the data globally between 2010 and 2016. So it's just incredible, and AI is feeding into this. a chat GPT search takes 10 times as much energy as a Google search. So we need the energy. So it makes sense that these big players have tapped into nuclear.
What does it mean to tap into nuclear?
So-
Is it the small modular reactors, or is it pressuring governments to build massive nuclear installations?
So here's the interesting part: is that I believe that this is almost a one-off kind of thing, because they're huge players. Not only do they have the cash, they're connected, they can make things happen. And from what I've seen is that they're tapping into unused nuclear, like dormant capacity, or capacity that can be restarted. So if I have this right, Microsoft was 3 Mile Island, and it was to restart 3 Mile Island. So these things, nuclear is not something that you permit overnight. Nuclear fuel, as we know, uranium has now tripled in price in the last few years. We can talk about that. I see some amazing parallels with silver, actually. So as I say, these are kind of one-off things. I think they have the ability to tap into nuclear. It's amazing, low emission, base load power. So it's fantastic for them. But how long does it take to get a nuclear power plant built, permitted, etc., right? The great thing about it is that, as I say, low emissions, small footprint. The difference is that for others who really are also going to need a lot of power to power their data centers, I think solar becomes the obvious sort of other choice. Yes, it does have a bigger footprint. It needs large slices of land to build the solar parks. However, you can permit them much more quickly, and you can draw the power from it quite easily. And you can, this could be almost self-contained, right? You could have, if you have the land to build a data center, where you've got also land to have a solar park next to it, you're basically off the grid, so to speak, right? The solar park is right there next to you, and it's supplying your data center. So you depend on no one.
And when demand really goes up, or when your machines get more efficient, you feed back into the grid. So there's a potential upside. You're now an energy producer.
Exactly.
Very interesting. Yeah. And even though, as you're saying, the build out for nuclear, restarting or new builds is years and years. It just represents how much demand they expect there to be, how long they expect that build out to last. You don't talk about that. You don't talk about something with a 10, 15 year development process unless you're expecting a 25, 30 year build out on what you need.
Exactly.
And then it's worth actually having the 10-year regulatory investment conversation, advocacy, whatever it is. It's worth having that conversation. So that again reinforces just the silver demand for the chips themselves, the silver demand for the data centers. If the data centers need nuclear 15 years from now, what does that mean for silver for the next 15 years?
Exactly.
Very interesting, very interesting. So yeah, I wanted to just get a sense from you, a couple of other things, because when I notice silver things, I kind of keep them in the back of my mind for when I see you. One is this idea, of course, silver is a monetary metal in the sense that in parts of the world, silver is the cheaper gold. Silver holds value, or silver is a physical, portable representation of value like gold. And so you have places predominantly in Asia, but other parts of the world as well, where it works that way. Could it also be a monetary metal in, you could say, the Western sense? To what degree? Because we've seen suggestions from Russia that they want to have start maintaining a strategic silver reserve. Now, to what degree is that for industrial reasons, the way you would treat it as a critical metal? To what degree could we potentially be seeing a resurgence of silver as a proper monetary metal in the Western sense of some kind of reserve, some kind of monetary hedge against fiat currencies?
I can only assume that for them it's possibly both. I just feel like because we see the importance of the monetary side, they're very well aware of that, because we see the now emerging importance on a strategic side. It's a win-win for them either way to just start building up silver reserves, and I think that they're seeing things like what have happened in the last, say, 10 or 15 years, China having dominated critical minerals and elements, for example, pushing up import duties when they needed to put pressure on the West. And now, of course, relations have soured between the East and the West. You've got the BRICS sort of cabal developing. You've got embargoes by the U.S. on Russia because of the Russia-Ukraine war. So they're turning more towards the East. They're wanting to trade more and more with each other. They're looking at ways that they can pay each other in each other's currencies and avoid the U.S. dollar. I just think that, they see what we see, which is that we've had, including this year, 4 consecutive years of deficits in silver. Russia produces a fair amount of silver, and they must be thinking, there's plenty of demand from our friendly partners. Why don't we build up reserves? And if anything, we can supply it to them. China's already willing to pay, and I know this, I was told by a large silver producer that produces only silver, which is a rarity, and sells about half to the West, the other half to China. And China comes to them and says, we really, really, really want our silver. We are prepared to pay you $2 over spot. We'll pay you 2 weeks in advance of delivery. And
just lock up the silver supply.
We need it badly. We're prepared to pay more, and we'll take everything we can get. And so I believe that we're going to see the silver price, the true silver pricing start to shift east from west, where their markets, their futures markets, are meant for delivery, as opposed to ours that are just meant to trade, right? And all sorts of potential shenanigans going on there. So I think that's probably going to be healthier for the silver market as we move forward. But I think that
the physical demand.
Absolutely, exactly.
That's interesting. Well, I guess that transitions us nicely into supply. We've been hearing about this massive looming supply deficit for a few years now. It hasn't necessarily fully kicked in. So what's the latest on taking everything we've just spoken about demand and the upping of demand in key areas, key regions? What's your latest projections, or the best available projections on this supply deficit?
So back in March, for the first time, I had started saying publicly what I thought was happening in the silver market in terms of why the price looked like it was capped, while we saw 3 consecutive years, and then 4 including this year, of silver deficits. Now, when we say silver deficits, let's just look at broad numbers for viewers. The silver market is 1 billion ounces a year, about 80 supply. About 85% of that is from mining, and about 15% comes from recycling. However, demand is 1.2 billion ounces now, and it's been growing to 1.2 billion ounces over the last few years. And if you add up the forecast deficit for this year with to the last 3 years, we're probably going to be at somewhere around 740 million ounces for these past 4 years. That's 3/4 of 1 year's supply of deficit across 4 years. So I started looking at how is it possible that if we've got these ongoing deficits, especially industrial users that need their silver, we see that they're hungry for it. They've been getting their silver somehow. The market's not, the demand's not going unmet. So I figured there has to be some kind of supply that's allowing them to tap into without pressuring miners to produce more. Because mine supply, by the way, total supply has been flat for a decade. The Silver Institute not only believes it will remain flat, but they also think it's going to actually fall this year by 1%. And that's with demand at 20% above supply. So it's just wild numbers. And so this pressure from demand is not enough to push supply up. So that's really very telling. In any case, if you look back, I believe what's happened is that over the last 4 years, and when I looked at what I call secondary supplies, and this is what's held by the COMEX, it's held by the LBMA, the Shanghai futures, And then you've also got the silver ETFs that have considerable amounts, hundreds of millions of ounces, if not up to billions of ounces of silver as well. And if you look at the charts, which you can find, they're available online, all of them have seen their inventories peak around early of 2021. And ever since then, their inventories have been dropping. Anywhere from, it varies, but anywhere from about 40 to 70% down in the last 3 years, 4 years.
And this is the supply that could theoretically step in when you have
exactly, and I believe that's what's been happening. So you've got this demand that has been well above supply, but you've also got this secondary inventory or secondary supplies that are just sitting there. I think that especially industrial users have said, oh, well, there's this supply. Why don't we just go and buy into that, drain those supplies? We don't need to push miners to give us the silver. We can just go and drain these secondary supplies. And that's not going to affect the silver price because silver's trading at X dollars. We're going to buy it at spot, whatever that is, and it varies, and we can draw down. I believe that game is almost over. And so I was saying this back in March. Interestingly enough, about a month later, someone in the industry emails me a report by TD saying essentially the same thing. That
we're maxing out what we can be pulling out of these supplies.
Exactly. Inventories are being drawn down. We've got, I was saying at the time, 12 to 18 months. They thought 12 to 24 months. That was more than 6 months ago. At this point, we've maybe got 12 months, maybe still 18 months left, and then the game's over. I think that the market started to realize that probably in the second quarter of this year, and I think that's why silver prices started to move up, and now we're at the top end and above the range we've been at for 4 years, and miners are starting to make some money, right? And it's starting to be reflected in their share prices. They've all moved up. Many of them are up 50%. Some are up 50% in the last few weeks. Many are up 50% in the last few months. It's been a good time this year. Silver has outpaced gold this year. Silver is up about, I think it's 44, 45%. Gold is up a little over 30%. It's been a tremendous year for silver.
Well, that gets us to, I don't want to keep you forever, but I wanted a couple more things that I like to get from you when we see you. First of all, you mentioned the stocks, some of the stock prices of some of the miners, and you're drilling down into the silver sector a little more than most. So would you have any specific recommendations for our viewers of miners you've been looking at that you think are poised to make some of those types of
Absolutely. So one of the ones I like a lot, it's a rarity in the space because they produce only silver right now, Aya Gold and Silver, which is actually a Montreal-based company. And they produce in Morocco. They not only are they about to quadruple their production, which is phenomenal and rare in this space, they also have exploration and expansion potential through other projects, also Morocco, that are turning out to just be elephants, polymetallic elephants with a very large silver component. So I think that their silver future, is very attractive and very promising. And actually, my subscribers about a month or so ago managed to get a double in that stock. It took about a year and a half, I think, but did very well with it. And so I still like it very much. I think that it's very attractive. So that's on a sort of a mid-tier cap size. And another one that is also a Quebec company is Cerro de Pasco, which is very interestingly more than a mining play. It's still mining and it's going to produce a lot of silver. It's actually, if you look at what they're going to do, it's more of a remediation play. So they have the rights to a tailings and stockpile of. It's actually one of the world's largest above-ground metals inventories. So a rarity in its own way. They're advancing this. Sprott is very, very big in this play. and very excited about it. I was at a conference just last week, and it was really moving quite a bit. The stock is up considerably. They've just done another financing, but they have probably about 400 million ounces of silver equivalent, which is a behemoth in its own. If you look at the silver and gold components of that, so that's silver equivalent. If you look at actual silver and gold, it's about, I believe, 38% is just precious metals. And they're going to probably start producing in about a year and a half. But they're moving this thing forward very quickly. This is a mine that goes back about 100 years. It's been in continuous production for almost 400 or 500 years. In the early 1900s, J.P. Morgan was highly invested in this mine. He actually brought it on the New York Stock Exchange, and it was the place to work for anybody in mining. So it has a long history. It's up in the Andes. It's surrounded by the city of Cerro de Pasco. There are 67,000 people that live around there. They're chomping at the bit to get this mine back in production. It will mean a lot for the city, and so there's a lot of support. They spent 4 years getting access to drilling in this mine. They had to get the government to agree to what they call an easement, and so it was 4 years and many millions of dollars to get that to happen. They've got that earlier this year, so now they have access. They've been drilling. I think it was something like 40 holes. They're almost done drilling 40 holes. And then next year, they've raised a bunch of money. Next year, they're going to do something like 200 holes to potentially define a resource and go to a feasibility study. And this is going to be a real cash cow. We're talking about probably cash flow of over $100 million a year, potentially a lot more than that if you do it at spot prices for the metals. It's, as I say, polymetallic. There's some lead, zinc, and copper in there as well. That's a really exciting play. I think people should look at that.
It sounds like. Now, very last thing, because I can't let you go without asking. Where are silver prices at the end of this year? Where are silver prices at the end of 2025?
So I'm going to say I think silver prices will at least be above 32 this year. Pretty sure of that, pretty comfortable saying that. I think they probably will be closer to 35. And I think for next year, 40 is very likely, and potentially as much as at least touching the $45 level sometime next year. I just think we're in this wave of there's so many things that are supporting silver, and both industrial demand. Same conference I was at last week, some of your viewers may know someone who is very accomplished in the silver space, a guy by the name Tom Kaplan, who's behind the Electrum Group, brought multiple companies, silver producers to market, manages money in this space. They were one of the world's largest private minerals rights holders globally at one point in their history. This guy knows what he's talking about, and he's a true silver bull. I asked him where he thought silver was going, and he said, in this cycle, triple digits, no problem. So yes, he's a bull. So, take that with a grain of salt, but I'm fully on board with that. I like to say kind of one last thing, which I alluded to earlier. There's a group out of New York called Gehring and Rosenzweig, and Leigh Gehring used to manage the world's largest commodities fund several years back. He thinks silver is going to $500. But more importantly, I came across something they said about the uranium market not that long ago. And so, and when I saw it, I thought, oh my goodness, this is a perfect parallel for what's going on with silver. So they said, we became uranium bulls 5 years ago. We saw that the market had quietly slipped into a deficit position, and that utilities were starting to tap into secondary supplies. And we knew that those supplies were finite and that uranium would have to start moving in a considerable way. So if you look at what happened in uranium in the last few years, it was for multiple years bottoming at $20, $30, bottomed somewhere around $23, and we're around $80 today. And when it started to move, it absolutely took off. And what we've been talking about in the last sort of 30 minutes or so in terms of where the silver market is, in terms of structural deficit, in terms of secondary supplies that we can tap into to meet this excess demand and the finiteness of these secondary supplies, this is a perfect parallel with uranium. And I've said, silver is the next uranium. I shouldn't say except. Uranium has gone to $80, has maintained those levels, has been very steady. I think we're going to see a tremendous, sustainable run-up in the silver price, and the new floor is going to be a lot higher. I think it's going to be probably somewhere above $50, which has been its all-time high for 50 years or so. And
that would parallel what we're seeing in gold, where the all-time high becomes a floor, and people just have to start making projections off.
That's right.
Well, this has been, as always, very enlightening and very encouraging, because some of the things we've been talking about have begun, and other things we could say we're closer to the middle in terms of the momentum. So, thank you as always for joining us.
It's always a pleasure, Ernest. Happy to be here.
I'm Ernest Hoffman for Kitco Mining. Keep it here for more coverage from Xplor 2024 in Montreal.
Kitco Mining special coverage of Xplor 2024 is brought to you by Radisson Mining Resources.